Hello, I'm Pete Hendrickson. In 2003, I wrote a book called Cracking the Code, The Fascinating Truth About Taxation in America. It's about the income tax mostly, focusing on three different aspects of that tax. The first part of Cracking the Code concerns itself with what it is that actually qualifies as the income that is taxed under the law. The fact is, income under the law doesn't mean money or earnings or receipts. Although in everyday language we use the word income to mean all that comes in, under the tax law, income is a legal term with a much more narrow meaning. Very simply put, income under the tax law means gainful activity involving the federal government, either as a federal office holder, a federal worker, an investor in federal entities, or as a recipient of federal benefits. The activity is what is actually taxed, but the amount of that activity is measured by the resulting gain. Thus, the language of the law generally adopts the convenient shorthand of referring to that particular variety of gain, which is generally denominated in dollars, as itself being the income taxed under the law. This is one of the primary reasons for people confusing the meaning of income in the income tax with money. When it appears that those subject to the tax are being taxed for receiving money, it is easy to make the mistake of concluding that everyone making money is thus subject to the tax. But this is not the case. The fact is, most people don't receive any income at all, or receive very little, as that term is meant in the law. Still, somehow we all get treated by the IRS and state and local tax agencies as though every penny we receive is income. The reason for that, and how to stop it, is the focus of the second part of Cracking the Code, in which the reader learns that due to a generations-old practice rooted in a common misunderstanding of the rather complicated body of law that has grown up around the income tax, virtually every payment made by one American to anyone else is accompanied by the creation of a legal document, technically known as an information return. You know these legal documents as W-2s, 1099s, and K-1s, mostly. These information returns are intended to be used only for reporting payments of income, not mere payments of money, and the laws dictating their use say so plainly. However, even just the condensed representation of the tax laws that we call the Internal Revenue Code is well over 3 million words long, and I believe I can safely say that practically no one issuing information returns has ever read all the laws associated with those documents. Indeed, very few have read any of those laws. Instead, most payers issue those documents for every payment made because they don't know the meaning and effect of what they are doing, and because they have been trained to do so by the IRS, which has a long history of presenting Americans with carefully selected excerpts of the law, intended to conceal both the legal effect of instruments such as information returns and the general limitations of the income tax. That this is done will surprise none but the most naive. After all, the mission of that agency, like that of all tax agencies, is to maximize revenue. Period. Further, under our legal system, the responsibility for knowing the legal effect of a tax-related instrument rests on the one signing that instrument, not on the tax agency, even when that agency has an incentive to mislead.